One of the first things a near retiree should consider is Medicare and your health insurance you're going to have in retirement. Hi, I'm Michelle Smollenberger, a financial advisor here at FDS, and today we're talking about Medicare. And there's a few things we're going to talk about. So first, we're going to touch on who Medicare is for and when it applies. We're going to talk about the types of coverages you'll receive, and then just some things you want to remember, and we'll see that on a timeline of how this impacts you. So very high level, Medicare is federal health insurance for those who reach age 65. Now there are a couple of people who can get Medicare in addition. That could be those people with some disabilities, and you have to qualify for that, so there's very specific regulations around that. And then also people who have other things like an end-stage renal disease, things like this. So there are people besides those age 65 and older, but I just want to mainly touch on that today. So first, let's jump into the types of coverages that you receive with Medicare. And if you're near this age, or you've thought anything about Medicare, or you've taken care of someone who is 65 or older, then you probably know a lot of these, or you've heard what they are. So we're going to review them so it's really clear. Part A of Medicare, and this is an automatic coverage that you get at age 65 and sometimes is referred to as the free part of Medicare because you don't actually pay a premium for it. Part A is for inpatient hospital visits or periods of time. So when you have to go to the hospital, if you're going to be in there for a long period of time, that is typically what is covered with the Part A coverage. There are some other small coverages outside of these general ones that do fall into these categories as well, but we're kind of just talking on a general level to help you understand when you think about it for retirement, what you're going to need to be considering at different ages. For Part B, this is typically outpatient. And this is just like you have your health insurance through your employer maybe today. You can think about it kind of this way. It's this outpatient, it's just kind of your basic medical insurance coverage. So that is what the Part B covers. And this is where you do pay a premium. So this is kind of one that people consider, what am I getting? What am I paying? So this is one that you will have to pay for, and you'll start to look at what you get. Part C is also sometimes referred to as Medicare Advantage, and when you get this, the reason that it's referred to as Medicare Advantage is that that's kind of the title of the plan or the type of coverage you would buy from an insurance company. So you would buy this from an insurer, and what you're actually getting is Part A, B, and Part D. And so it's basically a bundle of A, B, and D, these different coverages, all in one. And so they typically just call that a Medicare Advantage plan. And we're going to touch on this a little bit more, kind of what's included and why these are different. Part D is really for prescription drug coverage. That is what this covers. So just like, for example, today, you have your health insurance coverage. You know when you go to the doctor, you might need to be in or out of network, and so you know that what you're going to pay for that is going to be dependent on the provider that you're seeing. Just like that, then if you need to go get a prescription from the pharmacy, you're going to have a different coverage for that prescription drug. So this is where this is the part that applies to that. And then Medigap is just very simply a supplement for anything that's not covered in these above coverages. So for example, think about it as today the health insurance you have, and now you go to the doctor, the claim is filed, you get the information back from your health insurance company of what the total cost was, how much was covered by insurance, and now there's this ending balance that you may or may not need to pay. This is where Medigap steps in. So after A, B, C, or D coverages have paid what they're going to, now this supplemental insurance policy can fill that gap. So that's why it's called a Medigap, because it fills in the gaps for whatever coverage it is that it's applying to. So now that we know really the basic parts of Medicare, I just want to put this on a timeline to help you understand as a near retiree, what it is you want to be thoughtful of. And really what you're doing here is you are gaining clarity from today and through the future of what you need to have in place. And so we're just going to say that when we even start thinking about health insurance, maybe, near age 30, it could be age 25, earlier than that if you start working right out of college. It could be 26, 28, depending on coverage you have through your parent. But let's just say at a very young age, you start thinking about health insurance for yourself. And so typically at these ages, you have employer provided health insurance. So here, when we're young, we're thinking about this. Now, another thing you want to be thinking of though, is another way to save for these future, and so we're gonna say here that we're age 65, that for these future insurance needs or for these future health cost needs, is that this HSA is actually something that can be used at any point, really any point along the way. So it could be used for today's expenses, but what you want to think if you're putting money into an HSA is that you're pushing these funds down the road so that when you have other costs that maybe your underlying insurance isn't covering, that's where you can use this HSA for. So that's when we're young and we're thinking, I'm going to be a near retiree someday, so what can I do for then? But I also have my employer health coverage for now. All right, so let's fast forward maybe to age 55, when a lot of people, 55, 60, these tend to be some of these early retiree ages. So if you find yourself as a near retiree, and you might be falling into some of these categories. Now we know here that Medicare is going to start at 65. So if you're retiring here at 55, you've got 10 years here where you need to figure out what you're going to do. Well, here at age 55, you might have a few different options. So you could go to the marketplace, and this is just very simply you buying your own insurance through the health insurance exchange online that is available, and this will depend on your income. So you're just simply going to buy a health insurance plan that's going to cover your needs. Now you also might have, maybe you've retired 55, 60, anywhere in here before Medicare. You also might have some employer provided coverage for retirees. We do see this fairly often. Maybe you work for the federal government. There may be some policy that actually does still apply to you. So instead of getting a marketplace policy, you actually need to look at what insurance you have available as a retiree of your company or of a union. There's a lot of different places that provide this type of coverage. Now again, we've already talked about this, but this is one where you might say, I knew I put that money in that HSA for some reason when I started really young, and it grew and grew, so I don't actually need to buy any insurance, or I'm going to use my HSA to buy that insurance. This is where you start to have these decisions of what do I use to give me the coverage I need until age 65 when Medicare kicks in. Now, once you have Medicare, we know that that's going to cover a lot of the needs that you're going to have. But as we get older, we only need health insurance even more. And so this is where these Medigap policies, or even maybe you'll have this employer provided, again, as a retiree, this is something you might have. So instead of getting a Medigap policy, you might be using an employer provided retiree Medigap policy. And that's the purpose of it. It serves as your secondary insurance after your primary, such as Medicare, has paid their portion of the bill. Whatever's left, instead of you paying that full amount, that secondary insurance is meant to kick in. So this, what you have after age 65 is going to always be some combination of this. What we find is people reevaluating every year based on what your health needs are, the coverage that you need, because home health care or skilled rehab or skilled in-person care, those fall into this Part A and Part B coverages as well. So depending on where you find yourself, whatever age you are along this path here, that's where it's going to depend. So this is not necessarily after age 65 just to set it and forget it. It might be for Medicare, but for that secondary coverage, this is what you're looking at. Or maybe you find yourself as someone who has long-term care. And now you need to make sure that you're paying attention so that you know when your long-term care policy can actually pay for some of the things that maybe you're depending on your health insurance for. So a great thing that I can point you to is our most recent podcast where we talked about insurance and some of the common mistakes people make or even just misconceptions. So I would point you there to listen in because you might pick up some things in the health insurance piece or the long-term care insurance piece. And we talk about all these different pieces or tools because all of this is just a tool or a part of your financial plan. So as you're gaining clarity for what you need or what you have and have options for, really what we're trying to help you do is to be confident in what it is that your plan is going to accomplish for you. So if we can be helpful, if you've realized that you need to make sure that some of these pieces are in place, as well as just having money in your retirement for all of the other expenses you're going to have, please reach out to our team, schedule a time, and get started. But until then, we'll see you next time.